Well, that's a market for you, down and out. We are coming to you live on this edition of Closing Bell from the CNBC-TV18 News Online studios. As always, our team is here. I'm Prashant. Rima Surabhi with me here in the studios, and we've got Nigel joining us from the newsroom floor. It's a packed day, and it's a packed show as well. By the way, the Dabur numbers are flashing at the bottom of the screen. We'll have the management join us in just a bit, but the numbers up 3.5% on profits. And I think we got the revenue numbers flashing on as well, 11% growth in revenues. So that's the Dabur stock and the Dabur results which are coming through. Now, let's just spend exactly 30 seconds on markets and where we are at. So this is round two, right? It's round two of selling. Yesterday was the first one after a long time, and the market seems to be following up with another one. So if you just want to dissect what's going on, what's been going on since the morning, financials are the biggest pain point. And then there's Reliance as well. Actually, between the top financial stocks and Reliance, that is 100 out of the 180 points cut that you're seeing on the Nifty. So that's that large contribution, that large a drag. Supports, we put this out in the morning as well. I mean, there was an off chance I said that maybe by some miracle we are able to hold on to yesterday's low, no chance. So then we put out the level of between 19,200 and 19,300 where the next supports come in at. There are a bunch of things happening in that 100-point range. And hopefully around these levels, maybe another 50-60 points, the market starts to stabilize. We'll see. Mid-cap index is flat. It's not selling off in any large way. Small-cap index are taking a slightly larger knock. But small caps went up like no one's business as well. So small caps, yesterday the pullback was deeper on small caps as compared to mid-caps. And today as well, the cut is slightly larger. Globally, what's happening is that there is what you call bear steepening, which basically means that the long end of the yield curve is rising faster than the short end of the yield curve. The 10-year is rising faster than the 2-year. What that simply means is that, it's trouble. Essentially, but it's just 1 day, 2 days. But the implication is that in the short term, there is a bit of a slowdown coming. And in the long run, inflation perhaps is going to be a problem. That's the implication of what we are seeing right now. But we can talk more about that ahead. As a consequence of rise in the U.S. sort of yield, especially on the 10-year here has risen to about 7.2. The rupee is slightly weaker. So you got a bit of a mix, which is not very favorable to the setups out there. So we're at about 19,340, climbing down pretty fast in the last two sessions. Rima.
Hi. So the Nifty had just gone below the 19,300 mark. The low today was 19,296. So from that level, at least, markets have managed to climb up close to about 40 points. Round two selling seen in the European markets as well. Frontline European indices are down anywhere between 1 to 1.5%. That's the CAC, DAX, and the FTSE. The picture in Asia was not as bad. Shanghai, in fact, managed to close up in the green. Hang Seng was down 0.5%. So was the Korean market. Dabur's numbers have come bang in line with street expectation. Remember, Dabur gave us a cheat sheet, as Mangalam likes to call it, and they had guided for a revenue growth to be more than 10% and EBITDA growth to be in line with the revenue growth. What Dabur has delivered is 11% top-line growth and about an 11% increase in the company's EBITDA. So bang in line with expectations. The reason for the profit growth is being lower than the revenue growth and being at 3.5% is on account of higher amortization costs. So in line with expectations, and the stock is trying to pick up and recover some ground today. Hi.
Hi, Rima. Hi, Prashant. And hi to Nigel as well. I was actually looking at the global picture myself. Look at the dollar, by the way. It looks like it wants to head to 103, the dollar index. And that's been one trouble spot for the market. So that whole idea about how this will be a non-event, well, 2 days and still counting, not looking like a total non-event, at least just yet. Prashant mentioned about the rise in yields. The US 10-year about 4.15 last I checked. So that whole story is still on. And Wall Street futures have dipped lower. Suddenly, about half an hour back, there was a big drop coming in. There's about a 0.5% decline on the Dow, the S&P, and the Nasdaq futures. Today is a big day for earnings as well. You'll get Apple and I think Amazon as well today. So tech earnings really have to deliver to break this bear charge that we've got over the last 48 hours. Let's see. For the time being, we are looking at Sun Pharma reacting positively to earnings, but otherwise it is a pretty weak-looking screen. So what do we do in this next 1 hour? Mitesh is with us. Mitesh, the pressure of the selling is quite severe, as one can see right now. What would you do? Would you take any more short trades on the index? What about stocks, if not the index then?
In fact, we have booked out of short trades. We bought some Nifty put options yesterday, bank Nifty put options today. I think the only idea is that while the daily chart structure is also damaged with the kind of fall which we have seen in the last 2 days, we are also now nearing support levels. Prashant highlighted this level of 19,200, 300. I think what I'm looking at is exactly around 19,240 to about 19,200, which is the weekly gap which we got on the 3rd of July. That also was a part of retracement area. So I think that gap plus retracement should hold as a very good support. So while the structure is weak, I think selling near the support area, which is a very important one, is not a very good idea. So we've covered shorts. Now I think it becomes in the short term sell on rise kind of a market, wherein I would want to sell it closer to 19,500, 550 zones and then take it from there. So wait for some kind of a bounce to play. But otherwise, till 19,200 breaks, I am not taking a fresh shot on the index per se. On the stock side, I have one buy and one sell. Dixon is something which is broken out very strongly with good price and volume action. So recommend a buy here with the stop below levels of 370 for a target of 45.50. While HPCL, that's on the negative side. HPCL is a sell with a stop at about 276 half for targets of around 255.
Okay, all right, got that. Thanks very much, Mitesh, for the details over there. Well, we were highlighting the Dabur numbers that came in. Numbers are more or less in line with the estimates. The revenue is up about 11% year on year. EBITDA is up about 11.2%. Margins a little flat at 19.3. The volume growth, Mangalam tells us, has just come in. The volume growth number is around 3%. I think the street was hoping to get about 5%. So that could be a mild miss on volumes, if you could call it that. Mohit Malhotra, Chief Executive Officer at Dabur, is with us to talk about the performance and the outlook, more importantly, going ahead. Thanks very much for joining in, Mr. Malhotra. So let's talk about volumes first. As I said, I think Mangalam was telling us the street was working with 5%. You've done 3%. What's the outlook, and what's the ground level feel you're getting when it comes to demand?
Hi, Rima. Thank you for having me. So I think overall we are pretty positive about the results. So I think if you look at beverage, got impacted because of the unseasonal rains this time. That's why the volume growth is a little lower. If you look at ex-beverage, our volume growth, that is around 6%. And that was the results. So only the beverage portfolio didn't perform. Otherwise, our healthcare portfolio grew by around 11%. Our HPC portfolio also grew by around 11%. Foods, as a matter of fact, grew by around 35% for us. Beverage portfolio was kind of flat for the business. But for that, India business did well. So going forward, we expect with the monsoons being near normal, now rural should trend up. And on back of rural, volume should also pick up in addition to the price increase-based growth. So we feel it should be far better. Our international business volume growth was around 6%. Consolidated, if you look at volume growth, will be in the range of 6% for the whole business, which is India and international. Ex-food 6%, and with foods, India business is 3% volume growth.
Mohit, what according to you is the reason for the softness in the beverage business this quarter?
It was monsoon, basically. So I think all the beverage companies you see are down by around 25%. As compared to that, Dabur actually performed much better with the market share gains actually having here. And our business was kind of flat in beverages. Monsoon and out-of-home consumption got impacted a bit.
Okay, got that. What's the outlook on margins? In the current quarter, you've clocked in margins of about 19.3%. Your earlier guidance was that margins will be in the band of 19 to 19.5%. Do you maintain that, or are you continuing to see a downward trend in raw material which could push up margins?
Yeah, so margins will sequentially actually move up for us. If you look at last quarter to the current quarter, last quarter our margins was around 15. Now the margins are around 19. We maintain our guidance to the margins being around 19.5. The margins would have been better, but for our investment in media, we've invested around 30% is the media growth. So we've invested quite a bit on television advertising to surge the demand up, but margins will inch up because we find deflation kind of picking up. In India, business inflation in the current quarter was around 0.5%. Going forward, we will see deflation going up for us, and the margins will consecutively actually improve.
So, Mr. Malhotra, your earlier guided range for margins for the year as a whole was, I think, around 19.5%. Are you still in that band, or could it get even better?
It could get even better, so it will move up from 19.5, depending upon how the inflation environment actually pans out for us. If you look at last quarter, we didn't expect the inflation of foods to be around 11%, but it has been 11%. The basket of inflation is kind of changing. For us, spices inflation is also pretty high, but the hydrocarbon-linked inflation has actually come down drastically. So it could be a little better than 19.5.
Mohit, in terms of volume growth, will we see some pickup through the rest of the year?
I told you volume growth primarily got impacted by the beverage business because of the monsoon, and beverage happens to be very high in saliency in the first quarter. As we move forward in the other quarters, the salience of beverage will actually reduce, and HPC and the HC will be higher, and therefore that will help shore up our volume growth also going forward.
So what kind of numbers then should we expect?
Now it's very difficult, Prashant, to give you the exact number. But
not exactly.
If
just a ballpark. Would you be
any indication? I'll give you the business. I'll give you the understanding of the business which did not get impacted. For example, our healthcare business, which grew by 11%, had a volume uptick of around 5 to 6%. HPC business, which grew by around 12%, had a volume growth of something like around 8% odd. And those businesses did well and were not impacted by the season. Now, exact number is very difficult for me to actually give you a guidance for. But definitely it will be much better than 3% going forward.
Mohit, just to deviate a bit away from the numbers, there was this media article about, carcinogens in your honey product, in Dabur honey. Would you like to comment on that?
Yeah, so we stand by the purity of Dabur honey. We are the largest market leader, not just in India, but in the world. We export to around 100-odd countries, and we conform with regulations of every country in the world, including FSSAI, which is a regulatory body in India. And every single batch of our honey dispatched from a factory premises complies to FSSAI parameters, including HMF, which has been talked in the article. The article is completely baseless, without any scientific evidence, and it has absolutely no legal or any merit in the substance on where the research, which analytical lab it is. And I must tell you that Dabur honey is India's largest honey and world's largest honey, and recently got the Egg Mark special certification that we've got. This certifies the purity of Dabur honey. And we are the only Indian honey brand that is packed in US FDA certified facilities in India. Those have been inspected multiple times by FSSAI authorities, etc. So this is obviously planted in a motivated article, and it's coming right in time, a couple of hours before the board meeting. So I don't need to talk more about it. Thank you.
Okay, but good that you're putting the clarification on board, Mr. Malhotra. So you're confirming that no other certification agency or the FSSAI, none of the government regulatory agencies have reached out to you in this regard?
No, not really. No, not at all. Absolutely not at all.
Okay. All right. Take that on board. So finally, to wrap things up, to get back to the business, we've discussed overall margin outlook, which would be better than your earlier guidance. And once beverages pick up, you're talking about overall growth. If we talk about categories or segments, we have 3 more quarters to go in this year. Which ones do you think would be firing the most for you? I mean, foods, or would it be some of the other segments?
See, we want to gain market shares across the business segments that we are present in, and we should be growing ahead of the category growth rates in all the 3 categories, whether it's HPC, HC, and foods. But like the rural business is kind of trending, I expect the HPC portfolio to fire the most, followed by our healthcare portfolio, and followed by the foods portfolio, which are all margin accretive to our last year baseline. So HPC followed by healthcare, followed by foods.
Okay, all right. We'll leave it on that note. Thank you very much for joining in and giving us a perspective on the business. That is Dabur, talking about growth trends and also dismissing those reports that were suggesting or alleging that there's perhaps some kind of failure of tests with respect to Dabur Honey stocks 2% lower. We'll take a quick break on that note. On the other side, we'll have Anshu Sehgal as well as Devan Choksi joining in on the market perspective.
Welcome back. The big story today is Ambuja Cement has announced an acquisition of an almost 50% stake in Sanghi Industries at an enterprise value of 5,000 crore rupees. Nigel is now at the big wall to fill us in with the details. Nigel.
Well, the long-awaited deal has finally been announced, with Ambuja Cements acquiring Sanghi Industries at an enterprise value of around 5,000 crore rupees. I spoke to Mr. Karan Adani, who gave me further clarity on how the capacity will be added at this unit with the required capex at each phase. So at the announced enterprise value, it appears the deal is done at an enterprise value or an EV of close to around $100 per ton. But since they have surplus capacity, the remaining grinding capacity will be added at around $15 to around $16 on a per ton basis. while in phase 2, 5 million tons will be added at just around $70 per ton. Well, hence for the entire 15 million tons, the valuations appear at approximately $70 per ton. Well, it's a win-win-win deal for Ambuja, Sanghi, as well as probably for the entire industry. Let's tell you first why it's a good deal for Ambuja Cements. Well, it helps the Adani Group move towards its goal of doubling its capacity to around 140 million tons. And in the near term, Adani Group's capacity will cross that 100 million ton mark by 2025. Now, the key attraction of Sanghi Industries is it has limestone reserves of 1 billion tons, which gives capacity expansion visibility. And so, Ambuja has gone ahead and announced that the cement capacity at the Sanghipuram will be hiked to around 15 million tons in just the next 2 years. Let's turn our attention to Sanghi Industries now. Ambuja Cements, well, they'll be acquiring close to 56% stake from its promoters, and they have also launched an open offer for the 26% stake at around 140 rupees per share. So it's a good deal for the promoter as well as for shareholders, as the existing promoters could not scale up operations, and so it's better that the asset basically went into a stronger promoter's hands. Remember, Sanghi Industries has been reeling under debt. And finally, for the cement industry, it will be viewed positively, as consolidation in the industry is normally read through positively, while a potential fear is additional supply in the Gujarat market could lead to pressure on prices. And also, since Adani Cement is looking at adding capacity rather aggressively, demand needs to keep pace. Otherwise, in fact, it could put further pressure on prices as well. Well, smaller cement companies as well, they saw some traction, since they're trading either at a discount to the deal value or also a sharp discount to the replacement cost as well.
That was. Okay, got that. Thanks for explaining that to us, Nigel. That is the deal of the day. Finally, Ambuja snaps up Sanghi Cement. We have Deven Choksi joining in, Director Choksi FinServ. Deven, thank you so much for being with us on the show. We want to get your take on the deal of the day. So let's actually start with that. What have you made of this big transaction and what it really brings to the table? And the question is, from a investor point of view, would you be a buyer of ACC or Ambuja?
So, good afternoon, Surbi. So on one side, from the investor's perspective, it's a happy news that cement industry is getting consolidated even further. There are too many fragmented players, and as a result of which, I think the efficiency probably in the business is not happening. As you could see from the Sanghi's own balance sheet, that I think the company has been bleeding. They have not been profitable operation, despite of significantly valuable resources that they had in form of limestone reserves of 1 billion tons. At the same time, I think resources like the jetty, captive and captive power, still they could not make themselves profitable because of, I think, the fragmented size that is being created. In my viewpoint, I think this is a good news. On one side, you have likes of Ultratech with the largest capacity in the country, ACC, Ambuja combined, and with now Sanghi added into the portfolio, eyeing for a capacity of 101 million tons per annum in next year, and going in that direction to consolidate further. India infrastructure story remains, I think, the key driver for cement as I see it. And that's where I think the demand generation activity for the consolidated players would be very high. Particularly for Ambuja, ACC combined, I think this is going to be a good news because on one side, the logistic part of the cement, which is, I think, very key issue, which can possibly be taken care of because of the sea route which is available and the port which is available with Adani Ports, Adani Group of companies. This is where probably I think you are going to see higher amount of conviction as far as the profitability is concerned. If I am sensing it right, I think the cement is transitioning also into a newer area where the prefabrication work is basically going to assume higher amount of activity, which will produce, I think, better profitability also for the company. So overall, I think this transaction appears to me very positive from the investor's point of view, as far as I think Ambuja investors are concerned.
Okay, do stay on. We've got another important story to tell our viewers. This is a CNBC-TV18 News break, which got confirmed earlier today. Temasek is set to invest 1,200 crore rupees in Mahindra & Mahindra's EV business. Sonia joins in with the details. Sonia.
Absolutely. Thanks a lot for that. As you rightly pointed out, Mahindra & Mahindra will get an infusion of 1,200 crores in their electric vehicle subsidiary from large PE fund Temasek. And, the 1,200 crores would translate into a valuation of up to 80,580 crores for the M&M EV business. And post the infusion, Temasek will have a shareholding in MEAL in the range of 1.49% to about 2.97%. Now, MEAL is Mahindra Electric Automobile Limited, their EV subsidiary, whose products will start getting rolled out from 2025. Now, with this investment from Temasek, M&M's EV subsidiary is now valued, the EV business overall is now valued at $9.8 billion, and this is higher than the $9.1 billion that the EV business was valued at when BII invested in M&M's EV business way back in July of 2022. This is also the highest valuation that any electric vehicle company in India has gotten up until now. So this is a big deal coming in and large amount of funds. The management in the past has indicated that they don't want to go in for too much dilution for the business. So, the stake sale that they would do would be below 5%, and now it's confirmed it's coming around 1.5 to 2.97%. Now, M&M will also be reporting its Q4 earnings tomorrow. Its Q1 earnings tomorrow, rather. Strong earnings are expected this time around, both in the top line as well as the margin performance. The volume growth has been strong across the auto and the tractor segment, with an overall volume growth of 10% and the revenue growth of 21% expected, while profits could grow by about 27%. Back to you.
Okay, thank you very much for that. Devin, M&M's EV business has been doing well, particularly that XUV 500, the EV version, has been selling like hotcakes. Numbers will be out on Monday, I think. How do you like Mahindra & Mahindra, and what have you made of this further fund infusion into the electric vehicle business?
The fundamentals remains pretty convincing. Demand side scenario, as you rightly pointed out, I think is basically, remaining extremely strong, both from the passenger vehicle portfolio as well as from the tractor portfolios. I think they have got the best of the times probably in the journey at this point of time. Don't see any near-term hurdle either as far as I think the company's outlook is concerned. Maybe I think the concerns would remain about having allocated a higher amount of money towards RBL Bank. If M&M is basically further allocating more money into that particular space, I think that would be some concerns would be because of the investment into the non-related space. But otherwise, this particular company looks pretty convincing. And with the correction in the price because of some negative news earlier, it will become a buy opportunity sooner than later, I suppose.
Okay, well, Devin, we'll leave it there. Had a few more questions, but I think we're completely out of time. So thank you once again for being here with us. Anshul Sehgal is with us, Head and Executive Vice President at Kotak PMS. He's joining us now. Anshul, great to have you with us here on the program. Thank you very much for your time. With a market which is down 200 points, I have to start with a question on markets themselves. What do you think? Is this going to become a deeper pullback in your assessment? These things we're only wiser in hindsight, but at this stage, what's your sense?
Hi, Prashant. There are two vantage points through which you can look at the markets at this time. One is the sentiment in the market. Of course, if you speak with 10 people, 9 will be bearish. That also shows in positioning. There isn't too much participation in the markets. Of course, that has been changing of late. A lot of people have been coming in and investing in the markets. But then still, in aggregate, there is a lot of circumspection. So on sentiment, that seems to be the story at this time. And then if you look at the numbers, for this quarter, nearly 226 companies out of the Nifty 500 companies have reported numbers so far. And earnings growth has been about 31% for this lot of companies. Of these, the BFSI companies are about 56. And for them, the earnings growth is about 25%. Non-BFSI is about 173 odd companies. And for them, the earnings growth is about 35%. Of course, we've got to bear in mind that last year, at the same time, the quarter was weak because of Ukraine war being at its peak, and as a result, earnings being somewhat depressed. So in that context, there has been, in this quarter, healthy earnings growth for non-BFSI companies. But just the commentary tells you that there is confidence in India Inc. And that should actually do well, provide tailwinds for the markets long term. Short term, 2, 3 months, 4 months, there can always be volatility because of global reasons and also because markets have run up quite a bit. But long term, if there is a market to invest in, it is India. I don't have a doubt in it.
Right, Anshul, we are thumping the table, right? It's our decade. Let's hope that does play out. It has all the ingredients of it. But Anshul, you know, when you joined us the last time, you gave us a couple of themes that you like. If I'm not mistaken, I think it was sugar, defense, and IT as well. So sugar and defense, you know, let's keep them aside for now. IT, what's the view out there? You know, some of these numbers have been quite disappointing. The global economy on the whole is in a bit of a tizzy. But do you think from a longer term perspective, IT still looks good?
Nigel, hi. Last time when we spoke, my view on IT was that it is not a sectoral trend that we are going to see in IT. It will be a stock-by-stock opportunity that one will see. And some of that has actually played out. There have been divergent views, divergent moves also in IT. Certain large caps have given way because of quarterly numbers not being very strong. But there have been certain companies in the small and mid-cap space which have shown quite healthy earnings growth and where stock price has reacted as a result. And these are companies which had corrected meaningfully last year. As you are well aware, the index itself last year corrected about 25 to 26%. And some of these stocks were down as much as 50 to 60% in the last year. And on that low base, when numbers come out better than expected, of course, there is a rally on the upside. And we've seen some of that play out. But aside from this, I think the sector to look out for is going to be pharma. I think there are two trends which are quite evident in pharma. One is that there are shortages in the US market of drugs, generic drugs. And this is as much shortage as was seen sometime in 13-14. So significant shortages on the racks. And secondly, price erosion as a result has kind of abated. Company after company which has given results and where we've been on calls, it's been quite evident that price erosion, which was in mid double digits, has come down to single digits, sometimes mid and maybe mid to high single digits is what we are seeing as price erosion in exports. India business, in any case, continues to do well for most pharma companies. So this is the sector to really look out for over the next few quarters and maybe even years.
What about hospitals, I'm sorry. You know, hospitals was discovered by the PE guys about a couple of years back. They all made big investments. Now they're getting out. But, you know, the numbers have been strong as occupancies have been rising. Medical tourism has been on the uptick as well. Where do you stand on hospitals per se, since we're on the subject of pharma? Do you think there is upside or do you think it's all in the price now?
Rima, that question hurt me. When you said that it was discovered, hospitals were discovered by the PE guys, the listed guys are no worse. They're in fact better. And we, all of us invested in hospitals well ahead of time. And we discovered this space very early. Much of the gains in this space have actually played out. What we've seen over the last 2 years is that margins have expanded. And along with that, we've seen multiples expand. So companies which were trading at between 10 and 15 times EV to EBITDA are now trading at 25 to 30 times. And this is at a time when their margins have expanded from 10% to as high as 18 to 20%. So I would say that in this space, much of the gain has already played out. Most sort of institutional investors have participated. This is not a time to be over exuberant in this place, in this pocket of the markets. But you know, you could well see compounding of returns in this space over a period of time. For now, we think that much of the gains have already played out.
Anshul, hi, good afternoon. Surabhi here. So, you know, we've been debating and discussing this amongst ourselves over the last couple of minutes. We were all looking at Dixon move up the way it has moved up today. and trying to put two and two together. The news obviously is India putting a lot of restrictions on the import of laptops. I think you can only bring it in as part of your baggage. Otherwise, there are a lot of restrictions on bulk import of laptops. So what's your sense? I mean, the EMS space anyway has been extremely hot, but more for the design guys, the likes of Keynes and Sirma and some of these newer, and smaller companies. But how do you look at it? Dixon was the original giant, more on the contract manufacturing side, not so much on the design side. What did you make of this news of the ban on laptops, and would you look at EMS?
EMS, again, the opportunity is just tremendous. I mean, I was looking at some data versus 30 to 40 billion dollars. I forget the name that India, forget the value. That is the amount between 30 and 40 billion dollars that India exports from India to other countries. And if you compare that to China, that number is somewhere in the region of 600 to 650 billion dollars. And in a market which is about $1 trillion. So the room for upside in EMS in the country is just too high. There is significant room for expansion in this space. The question is that how much of that gain over the next 1 to 2 years is already built into prices. Many of these companies are trading at 40, 45 times, 50 times earnings for very thin margins, margins in the range of 3 to 5%. High ROEs, of course, high growth numbers, but it is for that reason that these companies are really trading at such valuations. So one has to be very cautious again on this space. Buy only those pockets where, even within this space, where expectations are low, and there are such pockets. Believe me, there are pockets like that. You can't buy this space. You can't paint it in the same brush and buy anything that you think will do well over a period of time, because valuations already build in upside. But this, like I said, if you have a 5 to 10 year time horizon, then this is a no-brainer. This space will actually grow quite significantly. As a professional fund manager, I need to be cautious of valuations.
Absolutely. Surabhi, we were, the other Surabhi, our colleague, the research team was telling me that so for EMS companies across the board, laptops and tablets are between 3 and 5%, less than 3 and 5% in that range of their total revenue. So it's very small. Apparently for Dixon, it's still small, but it's the potential. I was looking at an article. This is an older article. I mean, I'm sure we can find sort of newer figures, but this says that imports of laptops and imports of laptops, not tablets, had increased to about $4 billion. And bulk of it came from China. Almost all of it came from China. But this is for, I think, 2020. So you got one number. Maybe it's gone up even more since then. Yeah. So that's basically what you want to substitute locally.
And I guess it's that future opportunity that the market is playing on today. That yes, it's a very small part of the revenue. But if there is, for all practical purposes, if there's a complete restriction or practically a complete restriction, you've got to find local players, and who better than people who've got capacities, who are in the electronic manufacturing space already.
And that fear is lurking, right? Today it's laptops, tomorrow maybe it's going to be something else, and ultimately, whatever be the category that's
fear, opportunity.
I meant the general way, but I'm saying it's an opportunity for Dixon, right? If another category comes under the
but I'll just say one thing, right? Even for phones, there are instances where foreign companies the idea is to make here, right? Yeah. So Indian companies can make it, sure, but there are categories where foreign companies are setting up shop here and making it themselves. Exactly, like, for example, take the Apple supply chain, right?
Because the government doesn't care if it goes to a listed entity or an unlisted entity, as long as it's an entity
made here.
Setting up shop
here, assembled here, and
Okay, well, on that note, we have to take a very, very quick break, and thank Kanchal as well for being with us. As always, we'll come back on the other side and get you a sense on what's been buzzing around in dealing rooms. It's been another tough day for the bulls, so we'll get Nimesh in with all the D Street chatter, and then Mitesh with some final trading ideas as well.
Welcome back. Well, from this panic lows of closer to around 19,300, we bounced up closer around 80 points. And the heartening aspect is still the breadth of the market is not that bad. You still have more number of stocks that are advancing in comparison to the number of stocks that are declining. And the mid-cap index is up a good 100 points odd. So on that note, let's shift focus to our special segment, D-Street Chatter, to pick up what's the news in terms of dealing rooms. Nimesh, what are you picking up? I mean, the headline index is indicating a lot of pain, but individual stocks, plenty to gain.
Oh yeah, actually, if you look at the screen, even yesterday I said this, that there is no panic selling, so to speak, from the larger institutions, and that should have been the numbers as well. What we are saying is purely, unwinding pressure from the retail and HN investors who were a little overbought in many stocks, and also maybe those stocks are under pressure. But largely, in fact, contrary to the screen, I understand there is a small basket buying at a leading FI test. So the FI momentum still seems to be there, not very large, what we've seen in the past, but there is no big selling is what I understand as far as flows are concerned. Clearly, from a sector point of view, the pharma stands out, and that's one sector which is largely getting outbid and outperformed as well. In fact, now it's getting spilled to the second rung and third rung pharma names as well. So that's where now a lot of interest is now shifted back from the HNI investors in terms of buying into the small mid-cap companies. So that's the other feedback. I guess from a downside point of view, I guess some bit of profit booking is seen in the NBFC name. So a lot of the NBFC stocks which have done really well in the last many days has seen some bit of profit booking today.
All right, Nimesh, so that's about setup, and things may not be that bad. You look at the headline index, you'll say we're down 150 points, but actually there are plenty to gain as well. But tell us a few stocks. What are you picking up?
So, just to take that theme of, NBFCs forward, AB Capital is the first stock on my list today. Been a big outperformer in the last 1 year or so, if you look at the 1 year chart and all. But now there is a feedback that maybe you'll see a large block in AB Capital very soon. So that's the first one. The second stock is Indus Tower. At these levels, again, there are indication of block bids by larger FIs. So that suggests that there is buying interest by the larger institutions in Indus Tower at these levels. So that's the second one. The third stock is UPL. For second day running, big selling pressure from the larger FIs. So that's the reason why we saw a big crack in UPL, not only in yesterday's trade, but in today's trade as well. So on high delivery volumes, that's all is getting sold. And I believe one of the large long-only fund is active seller in UPL post the quarter one numbers. And the last stock is Zomato. This is going to be interesting. Huge volumes for the last many days. Even today in pre-market, there was a small block as well. The earnings are today. That's expected to be strong. So earnings will be important to track. But a large block can come soon because, for a large investor, the lockup ends today technically. So post today's lockup and the fact that earnings are today, after that, there could be a large block in Zomato as well.
Okay, thank you very much for that. Pushing towards 19,400. So there has been a good 100-point recovery on the index right now. It's the Adani Group name. So Adani Ports, Adani Enterprises are inching higher. You also have IT names. So pull up something like an Infosys or an L&T Technology Services, and you can see these stocks inching up. Z Entertainment, Aditya Birla Fashion, Polycab, that's also bounced back pretty smartly right now. And Indiabulls Housing Finance, which our team was highlighting, is currently up 10%. Mitesh is back with us for a few BTST calls. Mitesh, what have you made of this pullback that we're seeing?
So I said, I think, at the beginning of the show, we mentioned that we've kind of covered our short positions. So while the structure has been damaged, there are some support areas at lower levels. So you would want to see a throwback or a pullback before you venture into fresh shorts. So for the timing, I have two BTST calls. LTTS is a BTST, it's trading at the day's high. Keep the stop below 41.85, look for targets of around 42.90. And IRCTC is the other one. We had a trading call on the stock a few days back. Even now is looking good for some more momentum. So BTST here with the stop at 654 for targets of 670.
Okay, got that. Thanks very much for the details there and the trading ideas, Mitesh. Let's just go back to that story on Dixon and why that stock is possibly so excited in a downbeat market. Rahul Gajare, Executive Director at Haitong Securities, is with us, and he tracks, among other things, the electronic manufacturing space quite closely. Rahul, thanks so much for taking this quick call. So I think it all started when that announcement came in, right, that the government is restricting free import of or easy import of laptops and tablets, etc. The sense probably this is that it's tied into the PLI scheme for IT hardware, where they had set aside a target of, I think, $2 billion or investments of about $2 billion. But what's the expectation? Do you think, stocks like Dixon, I don't know who else, I don't know if Amber is doing laptops right now, who else can potentially see this as an opportunity?
Yeah, thanks, Surbhi. See, basically this announcement which came in today, this will clearly ultimately aid the overall manufacturing for manufacturing ecosystem, for laptops. And this restriction, like you said, it's only for certain types of, whole lot of imports which were earlier coming through, I think will get curbed. people can still walk in with one single laptop or personal computer. But what I do understand, with license, they can get into imports of laptops. So I think overall this will ultimately aid the manufacturing of laptops in India. Way back, I think sometime in FY22, Dixon's had a tie-up with Acer, for manufacturing, I think 500,000 laptops. So that was a good start way back in FY22. With these kind of announcements, I think other people will also have to follow line and either have their own manufacturing over here or get these things done from players like Dixon. Humber doesn't manufacture laptops, so that's clearly not in their domain.
Listed company that has in the past had something like this, and even for Dixon for that matter, glad you reminded us of that. They had this tie-up with Acer earlier. But you think they'll be able to quickly capitalize on this opportunity because the ban or the restriction has come in with immediate effect. It's not as if it's going to be implemented after a couple of months. It's immediate.
I think all the players will have to find ways and means to follow the new regulations, and there is no other way to go about this. So whether the leading laptop manufacturers will have to ultimately scale up local manufacturing, assembling, or tie up with companies like Dixon to get around this import ban.
Could you give us a number? What is the value of imports for these type of? Would you have a handle on that? Annual imports of laptops. I don't have that number handy. The kind of imports of laptops that we are doing, but PLI scheme towards laptop or IT hardware was essentially to encourage local manufacturing of all these IT hardware. Unfortunately, barring mobile phone, we didn't see significant traction in local manufacturing for under PLI. So I think this is just the push that maybe this particular space needs to enhance local manufacturing.
Got that. What about Syrma SGS or Keynes Technology? Do they benefit in any way?
See, they are more into the industrial EMS area. I'm sure they will be doing a large part of PCB related work. I don't think they have the capability, or they are not currently doing the entire laptop manufacturing.
Well, we'll leave it there. Thank you very much. Quick conversation. Have you back for a more detailed chat later. Now, there's a QIP coming. Texmaco Rail is the company in question. This is source-based. Yash has got details. Yash.
Well, that's correct, Prashant. So Texmaco Rail is looking to raise a sizable amount of fund for itself. What we've been given to understand from our sources is that the company is looking to launch a QIP issue by September, that is in a month and a half or so. As per our sources, the size of the QIP issue could be up to 400 to 450 crore rupees. That's of course sizable from the size of the company itself. We've written to the company, that is Texmaco Rail. A response from the company is still awaited. But just to set this in context with the stock price, the stock has almost doubled in the last 3 years. In the last 1 month itself, the stock is up anywhere between 43 to 45%.
Okay. All right. Yash, thanks a lot for that. Well, SBI as well will be reporting their numbers tomorrow. Abhishek's with us to run us through the key expectations. Abhishek?
Well, Nigel, in terms of NII growth on a YY basis is perhaps the highest growth that Street is anticipating in last 7 years or 28 quarters. The key things to watch out is the net interest margin can moderate on a sequential basis. Morgan Stanley is estimating a 5 basis point decline in net interest margin. Kotak Securities estimates loan growth of about 15.9% YY and about 2% sequentially. Now, Morgan Stanley estimates the gross slippages to be about 12,500 crore. This will be driven by the fact that agri portfolio is falling into NPA in this quarter for many banks. Now, Kotak Securities also estimates operating profit growth of 110.6% YOY and about 9% sequentially, largely driven by the treasury portfolio. Asset quality expected to remain stable. Motilal Oswal expects about 10 basis point decline in gross NPA ratio. Now, management commentary with respect to growth outlook will be seen closely. Two key stress book, which forms about 0.84% of the book, watch list and restructured, that movement will be seen closely. Now, our polls suggest NII growth of 30.6% YOY and about 0.9% sequentially. We are working with a profit growth of 161% YOY and a decline of a little more than 5% on a sequential basis. Back to you.
All right, Abhishek, thanks very much for that. That's SBI tomorrow afternoon. Zomato numbers have seen a vast improvement. I mean, the current numbers, both revenues, EBITDA at the net level, there's big improvement. We'll take
Prashant, may I just come in over there? Let's just take a moment to savor this time. This is the first time ever Zomato has posted a net profit.
At a net level,
It's finally happened. I mean, after I think the first time the whole debate of the path to profitability and all of that, well, finally, there's light at the end of the tunnel.
Absolutely. We'll take a quick break here. We'll put Zomato and other stocks to Ambrish Balega, who's joining us on the other side. Stay with us. Okay, there's a very smart recovery afoot. We're down just 130 points. I'm using the word just because we were down 200, but 130 points lower. Vast improvement, 19,400. Amrish Baleka is with us. Amrish, good to have you with us here. Let's get straight to your stock. Fine Organics is something that you like. Tell us about it.
That's the largest Indian player in oleochemical-based additives, which are actually used in food, polymers, cosmetics, and coatings. And the focus is on green and sustainable products. They have about 470 plus products, 850 customers, selling in about 80 plus countries. And the entry barriers are decently high due to the IP they have, and the customer stickiness is quite strong. And to a certain extent, they also have pricing power. However, Q1 earnings were below expectations, and because of which we have seen some correction. Though the exports were soft, domestic demand has been picking up quite well. It's quite robust right now. Management expects most of the plants to operate at full capacity by March 2024, and a facility in Thailand also is being commissioned in September 23. So this could be a near-term trigger. And the long-awaited Gujarat land also should be allotted soon. So all these triggers are there. And there could be some like inorganic growth opportunities in the meanwhile. This is what we've been hearing. So expecting FY25 EPS to be about 170, I'm having a target of about 5950, which is still lower than the 52-week high.
Okay, got that. Amrish, today a little short on time really because of so many earnings and so much going on. So apologies, but we will wrap it up on that note. Promise to do a much longer chat next time around. Thank you for that pick. Well, we're down to the last couple of seconds. And by the way, the market has managed to pull back, at least from the lows. Today, we were down below the 19,300 level just when we started the show. But from there, there's a recovery, 19,400 thereabouts on the board. And we need to look out for the Adani group, because a lot of the Adani stocks have put up green. Adani Enterprises, Ports, Ambuja, ACC, Adani Power. That's been one big chunk of the market where we've seen, of course, an up move. A couple of metal stocks, JSW Steel, Hindalco on the upside. But that's pretty much where the gainer story ends. No denying the fact that today was a weekday with the global weakness seeping in on Indian screens as well.
Okay, just a quick run through of some big movers. UPL on the way down, Titan losing 2.5% on the back of margin miss. Crude price is correct, and so did ONGC in today's trade. Outside the index, Vedanta was the big loser, down 6.5-7% as the promoters offloaded 4.5% stake. Delta Corp under pressure. Interglobe Aviation, despite that big 3,000 crore bottom line profit, the stock ends with a cut of 4.5%. Gujarat Gas also a bit sour in trade. On the gaining side, Mankind Pharma, Dixon Technology deserve mention, and Sanghi Industries on the back of being snapped up by Ambuja Cement.
Well, the low today was about 19,296, just under 19,300, and we are closing at close to about 19,400. So this is a pretty good outcome. A 100-point bounce on the Nifty is what we had by close. The question is this it? Round two and no more rounds on the way down. So that we'll find out. Bank Nifty day's low was, we'll just put this up, because there was a recovery. Yep, the day's low was 44,280, and we finally left off at 44,582. So here again, there is, almost a 300-point bounce actually. A little over a 300-point bounce on the Nifty Bank. So not bad. Mid caps and small caps, just take stock. Small caps were doing poorly as compared to mid caps. Small cap index ends actually in the positive. So that's a big turnaround. There you go on your screen. Big. And actually all of it came through after 2:15 or so. And the Nifty mid cap index will come up on your screen as well. There also we had a positive close. So this is not bad at all. So both indices were down when we started at 2:30. But there's been a recovery, which we have seen. Well, that's it from all of us here. Thank you very much for staying with us here on Closing Bell. But don't go anywhere. Our Thursday special big deal comes up next. Stay with us.